In QuickBooks, if you create an invoice, you have to receive payments. I've tried to emphasize that up to this point. You write an invoice and then you have to receive payments. There's 2 steps with that process. What happens if somebody pays us in full at the time of a sale? If that's the case, then what we want to do is we want to create a sales receipt. In a sales receipt, I don't have to receive payments because I can record the receipt of the payment and the sale both in the same transaction. A lot of people wonder, well, when should I enter an invoice and when should I enter a sales receipt? The answer is very simple. You should create an invoice if somebody still owes you some money after the transaction is completed. See, if they paid you a partial payment, you still need to create an invoice because that needs to go into your accounts receivable. On the other hand, if they pay you in full, then you create a sales receipt. They both work the same way, they're both entered the same way, except for the sales receipt records both the invoice part, the sales part of it, and the receipt of the payment in one motion. Let's go ahead and go into that create sales receipt and show you how that works. Let's just go look at one that's already created. This is for Bridget Keenan, and she bought some ceiling fluorescent lights. Notice over here that we have on the payment method that she paid us with a check, and the check number is number 1245. We have to put that in because we have to record the receipt of the payment. Now where is that going to go? Again, depends on how you have set up that payment method, and in this case it's going to be deposited to the checking account. The reason this has this little field saying that you can deposit this to the checking account is because when we created this receipt, we didn't have that preference turned on that said that the undeposited funds was our default deposit to account. If I turn that on, I go into Edit and Preferences, and I've got it turned on now. If I create a new one, that field will not be in there. And I'll show you in a minute just so you'll know that I'm not telling you a lie. But we have this deposit that's going into the checking account. That's the way it's recorded. And we just enter the items the same way. It has the taxes and everything else. And so on this, one side of the transaction is where the money is going, in this case to the checking account, or typically in most cases it would be to undeposited funds. And the other side of the transaction is this over here, where the item is. Remember, we can look on this to find out all of those numbers by pressing Control Y. And this shows us that it has $102 going into checking, and that we have the materials income of $95. We have sales tax payable of 29 cents to the Bayshore City, and the sales tax payable of $7.36 to the Board of Equalization. So this money is going into the checking account. This isn't going into undeposited funds. It's going directly into the checking account. We'll click on Save and Close. If I want to create a new one, it doesn't ask us where we want to put that money because we have set the undeposited funds account as our default deposit to account.